Good morning, grade 10. We are going to look at how we record the transactions directly into the general ledger with regards to salaries. So let's just look at the information given to us. The information that's given to us is record the info directly into the general ledger for June 2021. Very important to see that this is for 1 month only. The information given to you, however, is the gross salaries per year per person. So when you see gross salaries per year per person, you have to know that this is not what I'm looking for. I need to look at the per month. I'm looking for per month because we've got to record the information just for June. So let's start with that. 150,000 divided by 12 will give me my 12,500 per month. And my 120,000 divided by the 12 is 10,000 per month. So that's the first thing. If the information is given to you per year, to ensure that you are calculating it per month. If it's asked to record it for 1 month only. Now the next thing is our deductions. Now when we did our journals, you know that we did all the deductions there in the journal as well. Medical aid, only ANEL paid medical aid of 1,000 rand per month. So that's fine, that is per month. Pension fund is 7% of the gross salary per person, and remember we are working per month. So you are going to calculate the 7% per person per month. So we're going to take the 12,500, that's the per month one, times the 7%, which is 875, plus the 10,000 and 7% of the 10,000, which is 700 rand. And those two together, it is 875 plus the 700 is 1575. This is the pension fund money that's going to be deducted from ANEL and from B Dlamini, and together the deduction will be 1575. In the journal, it will show it separately. The UIF is also 1% of gross salary, and that is of the per month salary. So let's take the 12,500 times the 1%, which is the 125, plus the 10,000 times 1%, which is the 100, and together the UIF deduction is 225. Contributions, remember contributions, this is on the employer's side. So this is not going to be deducted from the gross salaries at all. This is an extra amount that's paid by your employer. And this is 8% to the pension fund per person per month. So we take the 12,500 times the 8%, which is 1,000 rand that we will contribute to ANEL's pension fund, plus the 10,000 times the 8%, which is the 800 that we will contribute to B Dlamini's pension fund, and together that is 1,800 contribution. UIF that we contribute as 1% to the 12,500, which is the 125, and 1% to the 10,000, which we've already worked out as well, is 100. So the employer will contribute 225 to the UIF of his employees, and then the employer will pay rand for rand to the medical aid of ANEL. Rand for rand means every rand that ANEL pays, which is 1,000 rand per month, is what the medical aid contribution of the employer will be as well. So with my information, these are my calculations, and now we need to put this into our general ledger. And this is what our general ledger looks like. I have got in my general ledger salaries, pension contribution, medical aid contribution, and UIF contribution. I have creditors for salaries, pension fund, medical aid fund, and UIF fund. These are all expenses. So these are just expenses for the business. These are all liabilities. They need to be paid over to these different funds. However, creditors for salaries will at the end of the day be the net salaries. That means the amount after deductions. This side in the salaries will be the gross salary. That means before deductions. So we're going to write here sundry accounts. Sundry meaning more than one account, different accounts put together. We do get this information from the salaries journal. But let's have a look and see what is this gross salary. Remember, per month, because we're doing only June. What is this gross salary per month for A. Nel and B. Dlamini? Gross salary per month, these two together, is 22,500. And this is the amount that goes to salaries, because this amount is the expense to the company or the business. So we're going to write 22,500. You have learned that for every debit there is a credit to make up this 22,500. Let's see if we can do that. Now we're going to look at our information again, and we're looking at the medical aid of A. Nel, which is 1,000 Rand per month. So medical aid, referring to salaries, because it's a deduction, the deduction of the salary, salaries journal, 1,000 Rand. The next one is our pension fund. We've got pension fund of 1575. Pension fund 1575 coming from the salaries journal, and remember, it's deducted off the salaries. The next one is UIF 225. UIF 225. It is deducted off the salaries. Remember, it is a deduction. And now I've got these three amounts. And this amount in my creditors for salaries, this one, I'm going to calculate as follows. I'm going to take the 22500 minus the 1575 minus the 1000 minus the 225, which leaves me with 19,700. And this 19,700 is also referring to the salaries account and is the actual amount that the employees will take home after deductions. So this is always the net salaries. Now if you check, you will see that this amount equals that amount plus that amount plus that amount plus that amount. So for every debit, there still is a credit. The next step is now to look at the contributions. Remember, contributions, we do not deduct that from the salaries. This is over and above. So let's have a look. Contributions, we've worked out that the pension fund contribution is 1,800. So we're going to put this in here, 1,800, also be visible in the salaries journal, and it is going to the pension fund account. There it goes to the pension fund account. For every debit there's a credit, and it comes from the pension contribution. The next one is 1% UIF 225. UIF 225 is the UIF, the actual fund account from the salaries journal, and there it goes to the UIF fund account, and it's the UIF contribution. And the last one is the Rand for Rand medical aid 1,000 contribution. There's my 1,000, also coming from the salaries journal to the medical aid fund. There's my debit and there's my credit. Medical aid contribution. Again, let's have a look. This 1,800, there is my credit. Here's my 1,000, there is my credit. There's my 225, and there is my credit. This is how we record our information directly into the general ledger. These accounts stay, they are expenses, they will close off to profit and loss and form part of my expenses in my income statement. These accounts have to be paid at the end of every month, because this amount is what the employees must receive to take home. This amount is the amount that we are liable for. We need to pay this over to the pension fund. This amount on behalf of the employees, this amount as our contribution. The same here. So we have to pay this amount and this amount to the different funds. When we do pay them, there will be bank on this side, 19,700, and it is now closed off. Done, nothing left. When we pay this, we're going to have 1,575 plus 1,800, 3,375 to the fund. Bank will pay that, and it is dealt with and not owed anymore. The same here. Bank will pay the 2,000, and again nothing liable for anymore. And this one 450, the bank will pay this. We're not liable for anything anymore, and we start a whole new month next month.